Hello, everyone. Welcome to Cryptonized. Today, I love this topic, commercial real estate, tokenized commercial real estate with a company that only does commercial real estate tokenization called Red Swan. Joining me today is Ed Nwokedi. And Ed, why don't you give us a little bit of a background on yourself and Red Swan, and then we'll just jump right in.
Hey, Mark. I'm Ed Nwokedi, and I am the CEO and founder of Red Swan CRE. And we are a marketplace of digital assets. We tokenize commercial real estate exclusively, both the debt and equity, put them on our platform, making it available for sponsors to have liquidity, raise capital, but also for end users to have the ability to buy affordable investments in high quality real estate, as well as have that liquidity option as well.
Wow. I mean, so you're doing the debt side. I didn't even realize that. So you're also doing debt as well as the properties itself?
Yeah, today's world, there's a gap between on the capital stack because, property values in some sectors have dropped, like office sector has dropped in values as much as 40% in some cases, just because cap rates have gone up. So when they're coming for loan maturities, the banks are typically saying now, last year or 3 years ago, we were going 65% LTV. Now, in order for us to renew this loan, we're going to be at 55% LTV. Matter of fact, your cap rate, according to our recent survey, shows that the cap rate is now 7.5%, whereas before it was 6%. And so we're valuing this asset at this value, which is a little bit lower. You're going to have to bring in, $4 million on a $50 million loan to make this work. So that's an eye-opening, realistic experience that we're seeing right now. And so we can create equity instrument for that gap, or we can create a preferred debt instrument for that gap. It all depends on the use case for the sponsor.
I've heard, and correct me if I'm wrong, it was either 3 trillion or 3 billion in commercial real estate loans that's coming due in the next 2 years. I don't know which of those figures it is. I probably should because there's
it's trillion. It's just trillion.
Okay. $3 trillion. I mean, that is so much money that's coming due, and we don't have a financial system to handle it. So are you preparing for that, or are you, what do you suggest is going to happen with all these properties? Are they all going to go into default, or they all have to tokenize here pretty quickly?
Well, I think tokenization is one solution. I think that the sponsors are definitely going to have to find additional equity. I think that they're trying to pass a moratorium from the government to stop this foreclosure happening because of, they consider it the government's fault for raising interest rates so fast. But I don't think that's going to happen. I think realistically, we're going to have to find some additional capital source. And tokenization could make a play there because if you're going after crowdfunding from retail investors, they're not as unfriendly as, I would say more institutional investors coming in. They really carve out the terms and really control the project so long as their money is in the capital stack. But if you're going out to retail investors, the sponsor still has the ability to control their deal. And also with regards to tokenization, many of the investors don't have voting rights on that class of stock. So the sponsor has much more control over their project and be able to collect capital. Now, they do have to pay a marketable return, a yield for that. And so I think that's where we come in to help give guidance to the sponsor in terms of how to price that instrument.
Okay. Now, first of all, I'm going to interject here. It is the government's fault for this. So the way they handled COVID, to me, was wrong. I understood why they had to act, but the way they handled it was asinine. So that started the problem. Everyone moved out of these offices into their homes, and who can blame them? Why they don't want to go back? So the office market commercially is a wreck. So we have all these loans coming due. So hopefully the government does do something to help mitigate that. And because they did that, they had to give all this money away during COVID, which caused the money supply to increase exponentially. And then, of course, you're going to have inflation. All this is predictable.
Yeah.
And now we have a situation where lots of people are in trouble, a lot of commercial property owners, especially office, and we're going to have to deal with this issue. You've got one solution, which I'm behind. That's what we do. We help tokenize real estate as well as other things. Now that I'm off my pedestal, I want to get into how you do it. So are do you have the platform as well as the services? What tell us about? Let's say I own a bunch of commercial office buildings in Miami, Florida, for example, and I came to you and I said, "Look, our loan's coming due in 2 years. I want to get ahead of this. What do I do?"
Yeah, so we would look at, first of all, the real estate, and luckily all of our salesmen have commercial real estate experience. Myself, 20 years experience, executive director at Cushman Wakefield Capital Markets. Our head of sales, Simon's CBRE experience. So we know how to look at an asset and understand the capital, the value. So once that's done, and we determine the values of, say, $100 million value of an asset, and they still have a loan on it that's coming due in the next 24 months, that's 50%, is $50 million loan, immediately they probably need to figure out how to raise more equity out of their $50 million of net equity in that project. So we would now take the LP capital stack, so that whatever entity controls the LP shares, and digitize 100% of that $50 million of LP stock. Once we've done that, now we can issue that stock to either Reg D investors who are in the United States who are accredited, or Reg S investors who are overseas who are not accredited. And so that is how we would go through the issuance vehicle to raise the capital for them. And in some cases, have to raise, if it's like I said, maybe that $100 million example and is coming due, it may be that we have to raise $60 million instead of 50, because the new loan is going to require a 40% LTV instead of a 50% LTV as possible. And so we have to raise more cash to make that happen. And like I said, the real question is, what is the marketable instrument in terms of yield that's going to attract investors who want to come into that deal and have very little voting rights?
Are you also suggesting to your clients to give off cash flow as part of a tokenized investment or any other creative ideas? The sky's the limit when you're dealing with smart contracts. Have you done any of that? Have you talked to these developers about that? What have you heard?
Yeah, so it depends on the situation. A stabilized asset right now that's already churning yield, we'll talk about a preferred yield, so that if it's able to carry an 8% preferred yield and then a waterfall after that, then that's what we would recommend, because we want something that's going to be marketable and attractive to the investors. But it's really nice for the sponsors because typically a sponsor makes most of their money on the back end, right?
Yeah.
They build it, they stabilize it, they value add it, and now in 3 to 5 years they're ready to sell it, and that profit margin they now pay back their investors, and then every dollar over the hurdle they now have a waterfall. Well, with tokenization, the obligation for the sponsor to sell off the asset to generate enough capital to pay off the investors, that goes away, because the investors now have the ability anytime after they buy, after their seasoning period, they can sell those shares to get liquidity and generate an IRR. So the sponsor now gets to crystallize his promote every year. So every year dividends are distributed. If they have an 8% hurdle rate preferred they're paying their investors, they pay that out first. If they made a dollar over that 8%, they're now getting their 40 or 70% of that into their pocket every single year, as opposed to waiting 5 or 10 years for that disposition. So that's a much better situation for the sponsor, and also is much better situation for the investor, because they don't have to wait 3 years, 5 years, 10 years for that asset to sell. They can say, look, my kids are getting married, and I want to make sure I can peel off $100,000. Let me take 10,000 shares and sell it in the open market. I'll put a price point on it I think is marketable, and see what bids come in, and that's a much more liquid process.
And not only that, right? I mean, because you could put things on chain, doesn't it make it easier to do those distributions or to communicate with your investors, or at least KYC, AML type process? I mean, what are some of the advantages, as well as what you've just described, that you have tokenizing these things because it's on a blockchain?
Yeah, so you asked, do we have the technology in place? So that how's that done? And yeah, we have the Token Studio, which is where we initially create the token. program the smart contracts in terms of any kind of contingencies that be made. So it's programmed in the smart contract, and then issue those tokens out in a regulated fashion. We're licensed with the SEC as an IRA, and we're also applied for our broker dealer, which should be coming in June this year. So we can issue those in a regulated fashion, have a cap table that manages all the investments for our investors, so they can easily log in and see their holdings on their dash panel, see what they own, and then if they want to sell, go to the ATS, our ATS, so they can now offer their shares to the sale. Our ATS is not live yet because we have to get that approved by the SEC, but that is the process of deliverables that we want to give to our customers. So by tokenizing it, it does give the investor full control of their assets. First would be to hold it in their own digital wallet, or hold it with a custodian like Coinbase or BitGo or any of those third-party custodians. But that's a lot more attractive than them buying something in a PDF form. Usually, they don't even know what a PDF is, and then they want to sell. They only have one person to call, which is their sponsor, and say, "Hey, I know I promised that I will not bother you for 3 to 5 years, but I need some cash right now. Can you buy me out?" And the sponsor says, "We have no obligation to buy you out. And right now we don't have the cash flow, but if you really, really want us to buy you out, we'll offer you something like, 60% off, and maybe we'll make that work." So it's a much better process for the investor to get that liquidity than to be stuck with, long-term investment they can't get out of. And I think that's precluded many investors from buying into real estate. One, the price point was way too high. You have to write a check for 250 to 500,000 to 10 million, depending on what size the project is. But also, I have no control of getting my money back until the sponsor decides to sell the asset.
Have you had any pushback from investors about digital wallets and their concept? I mean, if they don't understand a PDF, how are they understanding a digital wallet? Do you have a program to help educate them on, hey, it's no big deal? It's a pretty quick sign up process, and it's not that complicated.
Yeah. First of all, we teach them that your digital security assets are much different than a digital cryptocurrency asset, right? A cryptocurrency asset is like a bearer bond. So if somebody gets a hold of it and takes it, it's gone. You might be able to track it, but it's pretty much gone. A digital security asset is always recorded on a whitelist on our cap table in your name, so that if it ever gets lost, we can burn that and replace it. So the custody is not as critical as you would be. People fear that, somebody's going to hack my wallet, or I'm going to lose my keys somewhere and they're going to take all my assets. No, that's true with cryptocurrency. That's not true with digital securities.
I mean, that's such an important thing to bring up, and I keep forgetting to bring this up in some of these calls. But yeah, and there's a lot of protections on chain if you choose the right chain for that as well. Especially, I think ERC 3843 has got those protections in place just automatically in native, and I know there's other chains as well.
Yeah, ERC 1400 has it as well. But even the wallet process is so simple. You have a Google account. We can gift you a wallet right away with just your Google email account, and now you have a digital wallet with like Taurus or these other companies that can make quick wallets. And again, they're very safe for the assets you're holding in those wallets, which is our digital securities. So 3 steps, you have a wallet, and then you can.
I know it's not hard, but people are like, "Oh, digital wallet, what? What does this mean?" We got to do a better job of educating. I know it's still early, but we got to do a better job of educating people. It's no big deal. It's very safe. It's not like crypto where it can be hacked. And if it is, like you said, there's a process for getting it back, and those people have no standing.
Correct.
Because it's whitelisted. All right, let's move to, let's say I wanted to do a commercial real estate fund, and I wanted to tokenize that fund. Do you guys handle things like that as well?
We do, but we don't like tokenizing a blind pool fund where you don't have any assets. You aspire to go out and find assets, and you want to collect the money up front. That can be dangerous for us because we're trusting that you're actually going to make that happen. And many companies and many funds were set up a few years ago for like opportunity zone funds. You heard of those? Well, they collect the money for the opportunity zone, but they can't find the projects. and they're charging you 1% or 1.5% management fee every year on money you've given them, even though they haven't found an investment. So we don't like participating in those kind of funds, but we have customers that have funds right now with assets in them, and so we can now attach the tokens to those assets in the fund and raise capital for them. So they can create a blind fund, sort of a fixed fund for commercial real estate. Let's call it $100 million. But when they want us to now issue for raising capital for that fund, they actually put a piece of property into the fund with the business plan to develop an apartment building, and we know the value of that land that they put into is like $10 million. We can now use that as our basis to collateralize, to go ahead and tokenize, to put money into their fund. And then they put another project in, we do the same thing. And that's how they use their fund shares.
Okay, because I would picture a smart investor going out there and looking at distressed office, which is all over the United States, or focusing on an area and just saying, hey, I'm putting together a fund. Here are all the office buildings I'm going to buy. You know, I've already pre-negotiated it, and I want to raise money via tokenization to do it. That to me would be very smart to do in this market. Do you not like those types of investments, though?
I don't like those kind of investments just because of the risk factor that, yeah, there are a lot of deals out there to buy, but it's no guarantee that that person's actually going to get to buy those deals because, you know, there's going to be multiple people. I've been a commercial real estate broker and advisor for, 18 years at Cushman & Wakefield. So I put a property out, whether it be distressed or be stabilized Class A asset. Yes, there's 25 people who says I like to buy it, and they're now trying to raise money to buy it, but only one successful winner, right? So if we were to just take this person's word for it, they're going to be able to be successful in buying all these properties. That's kind of hard to do because they have competition and more deals fall out than they do get done. So we want to make sure they have the asset and we can verify the asset. In many cases, we have either Cushman & Wakefield or Ernst & Young do an opinion of value on that asset, and then we can raise money against it. So this way, we're taking care of our investors as opposed to putting them into something that may generate a lot of risk.
Okay. Let's switch to the other thing I see people doing with tokenization is, okay, Ed, I found a property and I'm buying it, and then I want to tokenize it right after I buy it, or raise part of my money through tokenization. It doesn't sound like you want to do the speculative thing, but once I buy it, tokenize it simultaneously. Describe what you do there and what the process is.
Yeah, that's more of a better fit for us. We have a project or a sponsor who buys an apartment building, and they're going to do a value add to it as part of the acquisition. But they already have the asset in their portfolio. They have, say, $15 million of equity they put into that asset in order to buy it and then to start doing their value add. Well, right away, we can now take that asset, take their forecast, and make sure the feasibility makes sense. But we can take up to 90% of that $15 million and resell it, take it back, tokenize it, and tokenize the whole thing, but sell 90% out to LP investors. And then that way, they're pulling their equity out of it, most of their equity out of the asset, and be able to use that for another opportunity. We think that's the best use case for your opportunity costs than having your $15 million stuck in that asset for the next 10 years, 7 10 years, which is not a very good use of your capital.
Okay, and as we close out here, why should developers, owners, investors look at either using tokenization for their projects or portfolio, or as an investor, why should they, or I should say, and as an investor, why should they be interested in investing this way? I know we talked about some of the reasons, so I guess my question is mainly focused on any developers or owners that are looking to tokenize their real estate. Well, why should they go this direction opposed to more of a traditional financial direction?
Well, several reasons. One is that with digitization of the asset, it opens up many more options they have for themselves. One, like I said, they can now pull equity out of the asset without having it just stuck and locked in that property for a long period of time. So that gives them the ability to build a larger base of assets under management, right? Because they can take that same $20 million they put in the first asset, stabilize it, pull $16 million or $18 million out of the asset, put it in other assets, stabilize it, pull $16 million of that. So they can buy a lot more assets with the same amount of equity. So that's a huge advantage for them. But they're also allowing their investors who come in not to be trapped. They're saying that, hey, you come in day one, if you decide you need money, you can actually take your shares and you can sell your shares. Matter of fact, you're holding your own digital shares. So if you want to sell them, you can sell some or all on an ATS network, and there's over 28 of them in the United States to get your liquidity. So I don't have to promise you liquidity. You now have the ability to have your own liquidity. I think that's going to be a very big sell for a sponsor going forward, because if they're not offering that and 10 other sponsors are offering that, they're going to start losing a lot of business, right? Because people always want the best capabilities when they make an investment, and that sounds like one. We're talking to groups, the larger companies out there, the JP Morgans, all these big companies. They're starting to really get engaged in digital technology, and they want digital assets as opposed to analog assets, just for those reasons. So the more they start advertising this, the more the smaller players are going to start jumping on it as well.
I totally agree. I mean, you see all the banks starting to jump in, mainly on the commodity side, stocks as well. But you just have Bank of America, Citi, BlackRock's been the biggest supporter of all this. I think they're talking more about company equity and commodities than they are real estate. But real estate's a natural fit for this, absolutely natural. And it's got a huge pain point, especially from an investor point of view of, okay, I gave you my money, now I got to shut up for 5 years and hope I get it back. So the ability
that
to
model's going away, right?
Yeah.
That third-party custodial model, where everything is centralized, is going away because you look, banks failed. You had $1 million in Signature Bank, and they just went under. You had money in SBV, they go under. So to put all your money or any of your assets into third-party custodians and trust that they're going to do the right thing is starting to go away, because realizing that they're not doing what they're supposed to do, and you better take responsibility for yourself to start handling your own investments. So this a way of providing this level of autonomy, I think, is good for the industry.
All right. Well, Ed, wrapping things up, how do people get a hold of you if they're interested in tokenizing real estate on your network with your services, your platform? Where do they go?
Best place is go come to our website, www.redswan.io, and if they're a sponsor, they can just let us know they have a property. There's a link where they can let us know the type of property they want to tokenize. That goes to our sales department and our analysts. They can look at the property and then come with a proposal. They can also reach out to me on LinkedIn. I'm always very responsive on LinkedIn to discuss their scenario, see if it makes any sense. But yeah, we're open for new business. We're growing our investor database quite a bit of people who want to buy in. And we're now operating in 3 different continents, both the United States, GCC, and also in Africa. So we think that we're bringing the world together to make real estate investment much more opportunistic.
All right. Ed, thanks again. Loved having you. And I'm going to have you back in a couple months. I want to talk about very specific things within the commercial real estate realm, because I just think it's such a natural for everyone, especially with $3 trillion coming due in a couple of years. It's just a natural thing for people to do, and to get step-by-step instruction, because I think a lot of it is that they just don't understand how to do it, and they think it's crypto, when no, there's way more protections than just crypto. The only relationship with crypto is that it's on a blockchain and it can be traded as a digital asset. Other than that, it's different. So anyway, if you are open to that, let's get that scheduled.
Absolutely. Anytime you'd like to have me back, Mark, just let me know. Like I said, we love to teach and educate the market. I go to Stanford, I go to Rice, any universities. These students are all over tokenization. They see that as the future. And so we're happy to enlighten anyone out there that wants to know more about tokenization.
I'm bringing you my latest recommendation, and that is Tetragard. Tetragard is a basket of tokens, like an ETF almost, that's got Bitcoin, Ethereum, PaxG, and a fee token called Quadrant. All wrapped up. You buy it in one spot using Ethereum. The link to buy is right here. And by holding this basket of tokens called Tetragard, you get paid rewards. just to hold the top tokens in the world. You can't go wrong. You'd be crazy to buy these tokens separately and not get anything for them when you can just do it all at once in one spot and get paid rewards as long as you hold that basket of tokens. Again, Tetraguard, you won't go wrong.